Happy Monday, everybody. This is the Live Market Open for Monday, December 14th, the last full week of the year and a very busy one with the Fed. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as every morning for FX Street. Okay, as always, we'll cover recent developments in markets, charts and levels the next 24 hours, and of course, your questions. If you can't see the chat box on the screen, please go to the address that's right here, tlk.io/fxstreet-forex-live-video. So what did we have on Friday and during the weekend? Good morning to everybody in the room. We had an extended crash of oil prices. It was one of the dominant themes in markets all throughout all last week, and also, of course, on Friday. We were still with crude oil at the $35 handle. We'll examine that shortly. And it had an influence not only on the Canadian dollar, but also on other currencies. We also had stock markets fall in the United States on Friday, not so much in Asia today. We had also falls in bonds, especially junk bonds, or sorry, they're not junk bonds, they're high yield ones. Anyway, mining companies, especially in oil and other things. We had problems with hedge funds redeeming money and all these kind of stories that were sort of on the sidelines, but they might be more worrying if this continues, of course. Okay, in terms of data, retail sales were okay. Headline missed by just a bit, but the control group came out significantly better than expected. We had a bigger impact from consumer confidence, which was okay, was within expectations, but most importantly, the current conditions component was better. So according to some analysts, this implies better Christmas shopping. I tend to take these consumer confidence figures with a grain of salt, but you have to talk about what moves markets and not only if it's really reflects retail sales or not. Okay, over the weekend we had Chinese industrial output coming out a bit above expectation, 6.2% year over year, but some had doubts about this data as well, as all with China. But with Japan, we had the Tankan figures coming out better than expected in services and non-services. That, of course, lowers the chance for a rate hike by the Bank of Japan this week. Okay, so let's look at a few charts and let's see what's going on. So in the wake of the new week, first of all, this is the euro dollar with the Draghi jump on Thursday. It was already nearly 10 days ago, right? 11 days ago. Since then, we've seen it drop below 108.30, rise back once again. 110.50 is some kind of resistance. Support is right here at 108, 109.25. Now we had it move a bit higher on Friday, and now it's edging a bit lower. Okay, but it's still within range. Still, markets are tense towards the Fed decision. So even if you zoom in, you don't see a real, it's nothing very significant this morning. Okay, let's look at today's events. There aren't many, but they're euro related. We have industrial output at 10 GMT. Okay, we already have the figures from Germany and France. Germany was a bit disappointing, so the expectations are low. And we have the president of the ECB, Mario Draghi, speaking at 11 GMT. This is undoubtedly the big event of the day. Not only one of the reasons is because we don't have too many other events, but he always moves markets, even if it was a busy day. If it were a busy day, we would have lots of action coming from him. After that ECB decision, which didn't meet market expectations and sent the euro higher, Draghi tried to do some damage control, tried to explain that the measures are actually meaningful, are actually a significant addition of QE, and the ECB could always do more. Let's see if he keeps beating on that drum and if markets buy this. So far, they didn't buy it because they expected something. They didn't get something. They didn't get this additional QE. They didn't get a deeper cut in the deposit rate. So all the explanations that came afterwards are not so meaningful, and the ECB sort of lost some of its credibility because it created these huge expectations and then missed them. Okay. Anyway, let's hear from him. At 12 GMT, we have the Bank of England's member Shafiq speaking. It could also move the pound. And in the night, at night, it didn't put it here. At midnight GMT, we have Australian meeting minutes from the recent RBA meeting. Usually it isn't such a big market mover, but for those of you trading the Aussie, of course, we'll talk about this tomorrow as well. Okay. Morning, Fabian. Good morning, Jax. Good morning. Anybody else who's here? Okay, let's talk about the pound. Mentioned the event today. So pound dollar with this USD sell-off, with this risk-off environment on Friday, went above 152, but didn't hold on to this level. I think 152 still works as resistance. Still, well, 151.60 doesn't really work anymore, but 151.15 to 152, I think, is the current range. Further support at the round number of 150, resistance at 152.50. Okay, let's see if the Bank of England moves something. Dollar yen was a huge market mover on Friday because of this risk-off sentiment. When the mood is damp in markets, falling commodities, falling stocks, falling bonds, safe haven yen enjoys it. Okay, so we found support, I would say. So first of all, we had this. Let's go back just a bit with dollar yen. We had this very nice range trading between 122.20 and 123.60. Had a clear breakdown below this line, a fall right here to 121.10, then a move exactly to resistance. Dollar yen is not one of my favorites. It never was, but I know that it's a favorite of Valeria Bednarek, and now I can understand why. So we've seen it move all the way back to resistance and then fall back. Went to deeper lows, but liquidity was low, atmosphere was bad. So we're back to the previous range. Let's see what's next. Currently 121.30, 121.10, still some kind of support, followed by 120.60 resistance. Well, this is not so important anymore. I would say that 121.90 is very small resistance, but 122.20 is the real thing. So that's a strong line to watch. Good afternoon, Matia. Good morning, good day, everybody. Let's continue. Well, dollar CAD, I think we talked about the sky being the limit here. So let's see where the sky is. Of course, we had for quite a long time, we talked about this line of 134.60, which was sort of, I was talking about this 11-year high for a long time, was the high in September. Since then, the Canadian dollar recovered and dollar CAD fell. Then moving back up, 134.60 still worked as resistance, but once we had a break above this line, we had it only pause here at 136.20, and then it continued higher. Okay, so I can add another line here. I don't know if it's really resistance. It just the recent peak, the last 11-year high, 137.55. Okay, just the high we've reached. It doesn't mean it's the end of it. Now we're at 137.10. Of course, a few developments in Canada. The Bank of Canada said that minus 0.5 is the lower limit for interest rates. Currently, it's plus 0.5. So they're not talking about a rate cut anytime soon, but the door is open, and they already surprised us. So who knows what they'll do next meeting at the beginning of 2016. What else do we have from Canada? Well, figures were quite mixed in general, but the important thing, of course, is the biggest driver is oil prices. We've mentioned that before. So look what's going on with WTI crude oil, low so far. Actually, it's the low since 2009, 35.25, currently 35.47. Any kind of bounce that we've seen in recent hours, for instance. This is the dead cat bounce type, okay? Really nothing. I can't say we've reached the bottom yet, so the recent low was 35.25, but no low so far. This area here, I still leave this line, even though it's price aided from all directions, 37.73, because that was the low in August in the Chinese stock market crash. So that's why this line could return to work as resistance if we have some kind of recovery. Okay, of course, 40 level is critical resistance. It used to be support. It's not only a round number. Look how it supported the pair several times. Further below, well, it's the post-crisis low, which was a swing low of 32.70. Yeah, right here. Anyway, this was only for a short period of time, and we're still a bit far from that, but who knows where we're gonna go next. Currently, WTI crude oil is 35.45, recovering just a bit, but it doesn't look good. Also, Brent crude fell below $40. It's the benchmark used in Europe, and the WTI in the United States. There's also another one, West Canada Select, which is more relevant for Canada, but in general, you need to know only that. Well, this is the most talked about oil indicator, WTI, and prices move more or less in tandem, okay? So Brent is always or almost always more expensive than WTI, but they maintain more or less the same distance. And West Canada Select is cheaper than WTI, but also maintains the distance anyway. This is not so good for the Canadian dollar, even though a falling Canadian dollar is good for other Canadian industries. But for the impact on the Canadian dollar, oil is critical and it's negative, okay? So I spent some time talking about oil because it's a really important market theme. Australian dollar. In Australia, we had last week an excellent jobs report. Many found it too good to be true, but it was the second time it was too good to be true. So even if the figures are exaggerated, it's still good news. But with this gloomy market atmosphere that we had on Friday, we had the 72.80 line, which is really important in Aussie dollar. When the pair lost it once again, currently 72.10. 71.50 support, 72.20, some kind of weak resistance, but 72.80 is stronger resistance. We have the meeting minutes during the night, okay? Kiwi dollar fared better. 67.90 is resistance, worked really well. Above it, we have 69. Support currently at 67. So it did fall because of the bad market atmosphere, because of the sell-off of risk currencies and the safe haven flows. But last week we had good stuff from New Zealand. We had basically optimistic central bank. So they did cut the rates, but they signaled no more cuts. And they weren't that worried about the exchange rate. They talked about sort of, what was the wording? Unhelpful, but not unjustified or unsustainable or things that are really warning. It's more just, well, not so. We're not happy with that. We'll complain quietly. Okay? Dollar Swiss, of course, the biggest move down came from the European Central Bank. Stronger euro means stronger Swiss franc. Currently managed to stabilize in range and above 98. But remember, there's intervention by the Swiss National Bank, and it depends a lot on the euro. This is how it's best reflected. Very narrow ranges around in the 108 handle on Euro Swiss. For example, this morning we have a range of 18 pips on Euro Swiss. This is the pair that the Swiss National Bank cares about most. Okay, talk about a few other crosses. Euro pound. Well, we have here clear support at 71.60, resistance 72.80. Pound was an interesting beast in recent weeks, unable to decide if it's going with the flow with the euro, or which was strengthening, or falling on risk off, or anyway, the Bank of England decided to see the glass half empty last week. The meeting minutes revealed that they're worried that the rise in inflation, especially wage inflation, that wages have flattened and sort of painted a more gloomy picture. But the pound did recover on Friday quite nicely. Euro yen, the safe haven pair, currently are just under 133. 134.20 is resistance, and support 131.50, around number of 130. And pound yen became really choppy lately. Not so nice technical behavior like we had in the past. So I would say that this looks like good support, right? At 183.20 or 30. And resistance More significant resistance only at 186. Okay, but it's a very, very choppy pair because the pound doesn't know where it's going. This is very different than dollar yen, where we're seeing very nice range trading and then very nice breakouts and moves. And all in all, I used to be sort of more bullish on dollar yen, but well, recent figures in Japan are positive. So let's see. It's a bit mixed. Okay, so I think we talked about many currency pairs and events. Let's take a look at gold. In general, depressed, but sort of not going too low. And I talked about gloomy atmosphere and stock market crash. So just a small peek at the S&P, and of course I'm looking forward to your questions. Yeah, so we have I think last week when we had a question about the S&P, we talked about it trading at the higher end of the range. Now it's at the lower end. Support is here at 2000, a very round number. Yet again, I'm not following it closely, but you need to know because things are correlated. Weak stock markets mean stronger dollar yen. Okay, so that's the currency checkout for the Forex report for these currencies. Talked about events that we have today, not too many, and events that we have that we've had so far. Any questions? Let's talk about the next events that we have during the week. You can also see the preview that we did on Friday, which is also recorded separately if you want to see only the preview. So first of all, let's talk about the big event for the week, for the year, for the history, for everything. Some may say overhyped, but I think it deserves a lot of attention. Maybe it received too much attention, but it's still important. The Federal Reserve begins the meeting tomorrow, expected to end it on Wednesday at 7 GMT. We have the decision, and this decision, for the first time in 9 years, the Federal Reserve is expected to raise rates. Okay, so it's expected to raise rates from a range of 0 to 0.25 to 0.25 to 0.50. Okay, first time in 9 years. First time they changed the interest rate since 2009, so it's 6 years, nearly 7. This is the implied volatility, implied probability of rate hike according to the CME group. This FedWatch thing. What we did have on Friday is some kind of drop in these expectations. That's because of the bad market mood. Okay, so in September, the Fed decided not to act because one of the reasons was the crash in stock markets, especially in China back in August. So we've seen this figure already showing a probability of above 80%. They started at 83. Currently, it's at 79.4. You can see here the previous doesn't tell us too much because it's not updated. Anyway, we have still markets expect a rate hike. It's almost certain. Surveys of economists expect a rate hike. Primary dealers, those that work with the Fed, expect a rate hike. It's 95% in everything. Okay. Now the big question, now it's not a surprise. The Fed gave us all the hints. The last one came from Janet Yellen. Janet Yellen said that delaying the liftoff has risks. Okay. So first of all, let's talk about the other case. If the Fed does not raise interest rates, that's huge. That's an astonishing surprise. That means it works for Wall Street, as some say. It means it cares too much about market movements. It means it loses its credibility. What it means in markets is euro dollar can jump 1,000 pips. It would not be really exaggerated, at least 500. Same thing with other dollar yen could fall 500 pips and things like that. Very, very low chance, cannot be ruled out. I don't think it'll happen. But if we don't have a rate hike on Wednesday, dollar is crashing. Now let's talk about the more probable option, about the Fed does raise rates. What is priced in? Is it already priced in? Well, we have a buy the rumor, sell the fact, because the Fed is expected to sweeten this decision to tell us also that the next moves will be very gradual. Okay, that it's not going to raise rates every meeting. It's not going to raise, that means 8 times in 2016. It's going to do it very, very slowly. And it doesn't only provide words from Janet Yellen or from the statement, but it also provides this dot plot, this chart which says where Fed officials expected to go. Now, also that could already be priced in. Okay, so it's a bit mixed. The Fed anyway is going to tell us it's data dependent. My feeling is that it's not fully priced in, that we're going to see initially, because it's an event of historic magnitude, we are going to see a stronger dollar in the first few sessions, perhaps up until the end of the year. But then we could see a reversal once the dust settles, once markets have the uncertainty behind them, once we have more, not a very, very clear path, but less mystery, and we could see money flowing to other assets with more risk, perhaps, things like that. Okay. So I have a question here from Fabian. Good morning. Where do you see resistance in euro dollar if the Fed doesn't hike? Hundreds of more pips to the upside expected? Yeah, I would say hundreds. And in saying 1,000 is not even that exaggerated. Well, maybe I'm exaggerating a bit, but for me, the most important line to watch on the upside is 114.60. It was some kind of resistance here. Back in the beginning of the year. Then it was the post-crash high. In March, euro dollar fell to 104.60 and then moved 1,000 pips higher to 114.60. Then this line was challenged again in the summer. And then after this swing false break on the Chinese crisis, when euro dollar went all the way to 117.12, then it made another move, and I still see it as important resistance. Further above 117.12 and 120. These are really the big lines. Closer lines, closer to where we're trading now, is of course 110, 110.50, 112.15, 113.75, which was the 2003 low. So there are many, many lines on the way up because these are levels we've seen earlier in the year. Remember that despite this huge recovery thanks to Draghi, which was above 400 pips, we're still lower than where we traded back in the summer. Okay, we're still sort of still under. Well, it is under 110. It's above the real lows, but can't say it's moving really to the upside. Okay, so if we do have a move. A rate hike, the move is not going to be proportional. It's going to be, I believe, weaker euro dollar, but no, just a few hundreds of pips, 100 pips, 200 pips, nothing really huge. And I'm not really also 100% convinced. It's important to remember also that liquidity is low at this time of the year. Okay, so so I have to take into consideration a few things. That the Fed has been preparing us for a long time, so it's partially priced in. On the other hand, it's a historic event, okay? Secondly, the path for 2016, it's expected to be gradual. How much of that is priced in? It's very, very hard to say, okay? We can look, of course, at the implied probability of bond markets, but it doesn't tell us. It's better for forecasting the near future, not the far future. Okay, where will euro dollar go? I mean, if I believe that the direction could be still down just a bit because the Fed is en route to tightening, even if this uncertainty will be behind us, and the ECB could still do more. Okay, but the ECB lost some credibility. So, and you put all this decision on December 16th, 9 days before Christmas. 2 weeks before New Year's, liquidity is already low. Of course, this week, the market, this is a busy week, but it's the last full week. So people are still in their offices, still trading, but already thinking about the vacation. So it's going to be a bit messy. We've seen, I think, on Friday already some signs of that, with some crazy moves in euro dollar. Retail sales were okay, but not that convincing. Euro dollar fell. Then consumer confidence was just a bit above expectations. Euro dollar went up on sort of mixed retail sales, and then consumer confidence was a bit better than expected if you look at one of the components, and euro dollar fell back down. So it's really, really messy. Another question: can the ECB live with euro at that level? Is it against all the efforts and cost the money? Right. First of all, the ECB prints money, so it has no limits. They would prefer a weaker euro dollar. That's right. 110 is not a disaster, though. It's, remember, most of the year we had a range between 104.60 to 114.60, or if you wish, 105 to 115 to keep it round. So around 110 is not that bad. Now, the weaker euro does help the Eurozone economies. We did see inflation tick up just a bit. They would prefer, I guess, closer to parity, but it's not a disaster. Okay, current levels. They want a weaker euro. They want higher inflation from imported goods, and they want better exports. But as they say many times, and maybe markets don't listen too much, the ECB cannot do everything on its own. Okay. Also, the Fed said that a few times, that it cannot do everything on its own. If you wanna, it cannot balance the budget. It cannot introduce fiscal stimulus. Also, the ECB cannot do reforms, which is a very general word. If you tell a Greek reforms, it means just cuts. If you, when we talk, for instance, in the French context, it's less red tape. So maybe it's not the best word, but investment is missing in the old continent. Structural reforms, making things easier, not only cutting, not these kinds of reforms. And the ECB cannot do everything on its own. Now, the best transmission mechanism the ECB has is weakening the exchange rate. But we already see, I can also testify personally, and you can ask your people, credit conditions are better here. So if you want to take a loan for a business, for a house, for buying a car, for anything, it's just cheaper. Here in Spain, mortgages are attached to the Euribor, and that fell. It's now about 6 basis points. It fell, it was at 50 basis points a year ago. That means that mortgages, each time it's renewed, they just cost less. So people have a bit more money in their pockets. Is it enough? No, it's still marginal. And the weaker euro does help. But it should be a bit more long-lasting and accompanied with other things as well. Okay. I was talking about the Fed. First of all, thank you for the questions. Regarding the Fed, maybe something else I wanted to say. We'll hear from the Fed that it's data dependent. Of course, every move will depend. They don't want to pull a trichet. They don't want to undo rate hikes. Worries about, I was talking about oil. So in the context of oil, falling oil prices, in general, it's good for the US economy. Why? Because taxes on oil in the United States, on gasoline, on fuel, doesn't matter how you want to call it, they're very low. So every fall in oil prices means that the consumer feels it immediately, first and foremost. Secondly, Americans use cars a lot. Okay, so if you don't live in one of the city centers, you have to drive a car. You spend money, so it's an important part of your consumption. So in general, lower oil prices, better for the US economy, more money to spend on other stuff. On the other hand, why is oil falling? Because we have a strong industry, the shale industry in the United States. Now, some of this, of course, it employs people, and these companies also took lots of loans. These are the high yield ones in some cases, or if you wish, junk bonds. Now, if there is a sell-off, it's trouble for markets, not only for those companies. So it's a mixed blessing. Okay. Another question. Thank you, Chais. You said that the comfort zone for the ECB is 105, 115. What do you think is the best value of year for the ECB. I think that somewhere around parity they would be even happier. But they would like stability, of course. Everybody wants stability. So I think they would be happy with just around parity. It would be also comfortable to have the same exchange rate, the same value. But 105, 115, 110, I think that they're not so comfortable with 115 because it could drift higher from there. But with 105, 110, it's okay. It's not a disaster. With 105, 115, they can say, look, we did our part. Now you, the governments, could do more. With parity or around that, or even lower, they could even say, look, we're providing huge stimulus. All right. More questions from Fabian, from Mathia, from Jax. I know which question you have, Jax. So the pair to watch today, you usually ask this question. So I'll provide the answer before you even ask. I think it's euro-dollar because of Mario Draghi's speech and because euro-dollar was a bit out of the focus last week because we had focus on commodities and, well, we had the echoes from Mario Draghi, but we had only second-tier figures. This week we have more important figures from the Eurozone, and today we have a strong start with speech from Draghi. Then we have German surveys and things like that. So euro-dollar is the pair to watch. It consolidated the highs, went a bit lower, went a bit higher. It's a bit higher than early last week, but very, very much looking for direction. And Draghi will remind us that also the ECB plays a part this week. It's not only the Fed. Okay. But anyway, of course, I don't need to invent questions for you. If you guys have questions, we have time to try to provide some kind of answers. Okay, in the meantime, I'll cover what else we have this week. Of course, Fed. Tomorrow, we have quite a nice mix of events. UK inflation figures. Will learn if inflation is still depressed or if core inflation is... You know me better than my wife. I don't think so, no. But we have UK inflation figures tomorrow, German zoo economic sentiment, the less important German figure, but it's earlier. Anyway, it's interesting to see that. US inflation data, it will not impact the Fed, but let's see if core inflation remains at 1.9% year over year. And we have dairy prices in New Zealand. They're expected. They rose last time after 3 consecutive falls. So let's see if it continues supporting the Kiwi. Sorry. On Wednesday, we have a busy day. Well, the focus will be on the Fed, but in the morning we will have Eurozone PMIs, forward-looking ones for December. Final inflation figures. Inflation figures disappointed. And UK employment, most important thing to watch there is wages. Let's see if it really flattened. If wages flatten at 3% year over year, it's not that bad. Let's see if it falls below 3%. US housing data probably will be totally ignored because of the Fed. Then, of course, the Fed, and then we have New Zealand GDP. My bet is that for the Kiwi, GDP will impact just a bit, but then the Fed will impact much more. Thursday, it'll be Fed hangover day, further reactions to the Fed, but we'll also have German IFO. That's the most important German survey because it's a wider survey from the #1 think tank. UK retail sales, and then jobless claims, the Philly Fed manufacturing index, probably also overshadowed by the Fed, and Friday, Bank of Japan's rate decision. No changes expected, and Canadian inflation data. Okay. Question from Fabian. In case Draghi wants to do damage control not only with words, when would be the next opportunity for the ECB to act in concrete terms? What could they do now to give markets reasons to follow their indication? Well, to answer your first question, they have a rate decision in January. let me try to find out the exact date, but it's not at the beginning of the month. Okay, it's I remember it was this year on the 22nd, so I guess it'll be around that. Should be monetary decisions. I'll try to find that out for you. Regarding, they did lose some credibility answering your last question. So what could they give market reasons to follow their indication? They could just keep on talking until markets are convinced. It'll be harder to convince them now after the disappointment, but they can still act. In terms of what they can do, well, they can do quite a lot. They can further cut the deposit rate from -30, where they cut it 10 days ago, to -40 or -15. They could also, what could they do? They could enlarge QE, not only pledge to reinvest proceeds like they did this time, but also enlarge the balance sheet more rapidly. That means buying more bonds, not 60 billion, but more, 70, 75. Okay, and they could also talk more about the exchange rate, but that would be minor. The big tools are just printing more money every month and lowering the negative deposit rate. Okay, these are the main tools. They just did less than expected, just reinvesting proceeds instead of enlarging QE, and cutting the deposit rate just a bit. So their decision is on January 21st. Okay, so that's 5 weeks from now. It's a lot of time. How much do you think the raise will be in terms of QE buys? Yeah, they can raise it from 60 to 75 billion. That's what the Reuters poll showed before the ECB. So that's 25% more. Some thought it would be 70, some 80. Anyway, now again, let me show you this. I have here. What Draghi did is damage control. If you see it on the screen, he explained that the extension of QE by 6 months from September 2016 to March 2017, plus the reinvestment of proceeds. That means that for every bond that matures, he's buying another one. Both of these together are worth 680 billion euros. Okay, so if we make this simple math, 6 times 60 is 360, sorry. So then 680 minus 360 of 6 more months means we have left 320 billion. Okay, so 320 billion divided by 16 months is 20 billion per month. So according to this very simplistic calculation, the ECB actually does add 20 billion per month. But it's reinvesting proceeds. It's not an immediate enlargement of the balance sheet. So it's not exactly the same. Yeah. Okay. Any more questions? Today's euro-dollar value is the range is 42 pips, also not huge, but moving a bit lower. 109.50 is the low, 109.90 is the high. Okay. Just mention that this week we have a schedule as usual, and I'll also be here on Monday. Let's see how markets also, and analysts, what they say about the Fed decision over the weekend as well. And then I'll be on vacation around Christmas. A question from Vivian: would kindly share links to where you see the monetary decisions and where you check the news in real time. Well, news in real time, there's the FX Street calendar on Forex Crunch, and of course on FX Street and other places. All right. Regarding monetary policy, if you want to do some in-depth analysis, of course, you can see everything on the webpage of the ECB, which has been revamped and looking quite good. monetary policy, more specifically here in the ECB website. They also publish a bulletin, so you can look up more data here. With my weekend was nice. Enjoyed the sun here in Barcelona. I can't complain. So these are links to the ECB. If you want the Fed, well, these are board meetings. Anyway, the Fed publishes, if you want to really be a geek, the Fed publishes the decisions in the same format every time. So here's the calendar of the Fed. Already, yeah, you can see there's no statement for this week. Of course, they haven't made the decision yet. Well, they probably made the decision, but they didn't publish it anyway. This is the recent Fed decision right here. And if you check out the structure of the link, if you want to be a real geek, then you can just change the URL. You can see it contains the date, and you can just put 1216, which is December 16th. Currently, page not found, but this is where the new statement of the decision will be this week. Okay? Kind of makes sense to hike in December, give 2016 a chance to settle in. No, yeah. They did say several times also that they'll hike this year, that they intend to raise rates this year, so this is the last chance. And yeah, some quiet around the holidays will allow them to rest, okay, and to everything to settle down. So it's time for the wrap-up for today. This is the wrap-up of the live market open. Monday, happy Monday, December 14th. This is the last full week of the year, and the Fed is coming up on Wednesday. But before the Fed, we had oil prices continue their crash on Friday, and also today they look a bit depressed. We had a crash also of stock markets and in the United States, and also junk bonds, okay? Figures that we had again on Friday from the US were quite mixed. Retail sales were okay with a better control group. Consumer confidence was also okay with better conditions. Not that important. Markets are a bit shaky. Chinese industrial output beats expectations. Good news from there, but people have lots of doubts about that. And in Japan, where people have less doubts, the Tankan figures, the surveys look good. Okay, today we have a very light calendar. We have Eurozone industrial output at 10 GMT. And then we have Mario Draghi, the president of the ECB, will try to rock the euro. Well, I hope he tries and makes it. Speaking at 11. A speech from the Bank of England, Shafiq, is at 12 GMT, and the Australian meeting minutes are at night. Okay, let's do a quick look at charts. We're seeing the dollar strengthening just a bit. Euro dollar now ticking lower during the show, very much within the range 109.25, 110, 110.50, and 108.30 are the lines to watch here. A small fall within the range, sort of a bit stronger dollar ahead of the Fed. Stronger dollar is also seen here, a bit stronger manner, I would say. 151.50, 151.15 in cable is support, 152 resistance, 152.50, and 150 are additional lines to watch. Dollar yen is making its way a bit higher. It found support here at 120.60. 121.10 is minor support, 121.90 minor resistance. It's very strong resistance at 122.20, which was the previous line of support. Dollar CAD, the sky is the limit with falling oil prices. Well, now a bit off the highs, 137.12. It was at 130, well, at 137 today. 137.54 was the high. 136.20 is support resistance, the sky, or maybe 140 the round number. Aussie dollar enjoyed good figures last week, but the gloomy atmosphere is hurting it. 72.20 is minor resistance, strong resistance at 72.80, 73.60, 74, support 71.50 and 70.65. Kiwi dollar holding on to 67, well, dipping below it, but still holding on. 67.90, 69, and 66 is support. All in all, this week is dominated by the Federal Reserve. Decides on Wednesday. They're expected to raise rates. Big question is what is priced in. They're expected to raise rates and also tell us that the next moves will be very gradual, and they'll release the dot plot. I believe it's not fully priced in. We might see a slightly stronger dollar. Okay, and if a rate hike is priced in, also the gradual moves afterwards are priced in. So let's see what happens. It's an open thing. I can only say one thing for sure. If we don't have a hike, then the US dollar will crash. Very, very low chances of that. Everything is ready for a rate hike. Okay. So I guess that's it for today. Let's see if we have more comments and questions from Fabian. Thank you, Yohay, for the links. I love geeky stuff to dig into. Of course, VFX Reading Forex French is my servant and reference for everywhere else. You look for Forex info. Thank you very much, Fabian, for the very kind words. Hope to keep providing useful information for years to come. Anyway, thank you very much, everybody, for coming. I wish everybody a safe and successful trading day. I'll be here tomorrow and see if Draghi rocks markets and how expectations are shaping up towards the Fed. Okay, so that's it for today. Thank you and bye-bye.